Hello everyone, how's it going? This is Brian here, and I think I've went through a little bit of a breakthrough in terms of what I can do to be much better in OTC trading, OTC setups, and specifically this is about dollar risk level. So the idea is that you're in a stock, right? And it's at a certain price, and if it breaks your risk level at a certain price, how many shares are you going to be in if maybe you want to lose the most, $10? So you're in a setup. How many shares should you be in so that you're in that setup? And if it doesn't work out, you lose a certain amount of money according to what your dollar risk level is. So how do you do that quickly? Well, here's an issue. I've been having this problem since December 6th when this is a platform for Schwab Street Smart Edge. It was no longer allowing free OTC trading. So the issue is that I would use this platform right here, the trade, and I would calculate my dollar risk level, just messing around with this estimated costs thing. So maybe with ILUS, right? You're at the ask, you're like, okay, well, 1,000 shares. Maybe I want to get out if it breaks this certain level or whatever, and then I calculate it, and then I'm in the position. And it's very easy to do the math because maybe you can change the quantity to 1,800 shares and the price instantly changes. And then you're looking at the limit price, you change the limit prices, you can figure out your dollar risk level. But even this way isn't very efficient. And the issue I had was that when I was no longer able to trade on Schwab, I had to switch to Fidelity. And this is Fidelity, and as you can see, there's no place here where you can put the prices, and it'll give you an estimated cost. So what I was having was two bad things. Number one, I was having to waste more time to get in a position, and sometimes I would actually miss a position, an entry point, because I'm too busy calculating the dollar risk level on Schwab. And then once I calculate it, instead of just placing an order, now I jump to Fidelity, and now I type this ticker, the price, and everything like that, and then I place an order. So not just that, number one, there is a delay in how long I was taking to get in the position, and sometimes I either get in at a higher price or I just don't get in the position at all. Or number two, because I'm too busy trying to calculate a dollar risk level, even if I wasn't having to put it on Fidelity, even when I was just trading on Schwab primarily before they started charging for OTC executions, you're still wasting time trying to figure out what your dollar position is going to be, what your size is, and everything like that. So it was taking away crucial time that you should be watching. It's at a very critical moment when you might be trying to get in. For example, this is a morning panic bounce play lower low setup. This is a drop, bounces, breaks this level, lower low, finds the bottom, and it bounces. And maybe instead of too busy trying to calculate a dollar risk level, you should be watching this, watching the level 2, the print, and having a better eye on the target in terms of how it's moving at the moment, and just to keep that into consideration, to be up to date with how it's trading at the very moment that it's making a critical move. So two main issues there. So I started messing around a little bit, and I kind of figured out a little system that's going to help with how to trade, and I put it right here. Let me try to zoom in, but as you can see, I made this little chart here, and this thing goes from sub penny stocks to something up to $9. Once it gets past $9, I think to calculate your dollar risk level, position size, it starts to move a little differently. It starts to be a little weird after $9. But I think with this, the way I have it right here is a system that's going to help me, and maybe it can help any of you who are very interested or trading, low priced stocks, which the majority of these are OTCs. And one thing that I really learned in terms of this is that regardless of, the dollar position size, the amount of shares that you trade is almost always the same. And as you can see here, if the stock is from 1 to 9 cents, The average size is 10,000 shares. You can see right here, this one was 1 penny, and the dollar risk level of 10 was the same in this section right here and this trade right here. I'll try to go over this with more detail and show some real examples, but you can see that if it's 1 to 9 pennies, 10,000 shares is the starting shares amount, the default, and then 10 to 99 cents is 1,000. Sub penny levels is about 100,000, and $1 to $9 is 100 shares. So let's go ahead and go over this on a real life example, or at least something that is very realistic. As you can see right here, I have one here, this is a line, and then this is like the risk level, and then this is like worst case scenario, the risk level breaks and you get out slightly below that level you were risking off of. So let's just go over this. Here's an example of 103. The risk is 1 cent. Worst case scenario, you're out at 95, so penny level if it doesn't work. Let's just go over it right here. I hope I can make sense for you guys to understand, but the entry is 103, the exit worst case scenario is at 95, and the risk is 1 penny. So let's go ahead and do this. 103, and then the risk level is 1 penny flat, right? Let's just do it like that. And worst case scenario, you're out at sub penny 95 level. So the idea is that this is a morning panic bounce play lower low. Again, here's a panic, bounces lower low off of this level, finds a bottom, bounces. Okay, this one is one that worked out. It kind of made an uptrend. I'm not sure how much further it went up, but at this point in time it did make a bounce. So maybe this line right here points to this green candle. You're in at 103. This thing bounced off of this level, at least in the time being, and it held 1 penny. And then worst case scenario, maybe it doesn't work right here. Instead of it going up like it is right here, it kind of downtrends and breaks the level, and you're out at 95. And that is the idea on how this thing is going to play off of. Let me go ahead and exit this now since it's not needed anymore. Because it is a 1 penny stock, it's going to be 10,000 shares almost all the time, unless you have to divide it in half, which I'll go over in detail. But again, 103, you're out at 95. Your risk level was 1 penny. So 103, $103 position. You're out at 95 because it didn't work out. It turns into a 95, dollars. So 103 to 95, the difference is $8, which is pretty close to a $10 risk level. And let's go ahead and just go over another example. 973 to 960, and the risk is 965. So let's do 973, 965. $965. Again, same idea, but it's a different price. And guess what? You're trading a much larger position in terms of how much did it cost, but it's still a $10 risk level. So let's go back. You're in at 973, as you can see. $973 position, 10,000 shares is still the same, and you're out at 960 worst case scenario. Again, maybe at least me, when I'm risking the day low, the lowest point it's ever been, I get out of the position if it gets to that risk level and it looks like on level 2, the price action, the tape, if it looks like it's going to actually break that day low, I will get out before it actually breaks it when it looks like it's about to. I'm not going to actually just wait for the level to break if it is the day low, because if it does, then that just means a bunch of people are probably going to be crying to get out of their positions, and I don't want to sell into like a crazy downtrend with a lot of slippage. So that's the idea there. Worst case scenario, You don't sell at your risk level right when it breaks it or when it's about to break it, but you sell a little bit below it because there was slippage. So you're in at 973 here. Your risk level is 965. It fails, you're out at 960. $973 position. That's $13. Pretty close to that $10 risk level. It's not an exact science, but the theory is with this type of way on how to trade according to this strategy right here, you're in a setup much faster. You look at it, okay, it's a 1 to 9 cent stock. The default size is 10,000 shares. You can even change it. In most brokers, you can be able to change it and make an adjustment so that the default size that shows up is even the same amount that you might trade if you know the range of price range of stocks you tend to trade the most. So does that mean that regardless of any price and risk level, I'm going to trade 10,000 shares? No, that's not true. I'm going to go over the second part of this, and that is how many sections you are risking off of. So for example right here, if we go back to the chart, every section that you're going to risk, or at least every section that is further away from your entry to your risk level, is going to matter. So as you can see right here, each section is, I have no idea how do you even pronounce that, but just a very small amount. And the idea is that you're in at 973 and your risk level is 965 right here. How many sections away are you from your risk level? So in this case, 973, one section would be 973 to 97 flat, and then the next section is 97 flat to 965. So that's 2 sections. And because you're just 2 sections, 1 or 2 sections away from your entry to your risk level, you stay at 10,000 shares. And that's how you're risked accordingly. So let's go over an example where you don't actually trade 10,000 shares in a setup like this, which I believe is the next one. This is 3 to 4 sections. So let me go ahead and put these numbers onto the chart, and we'll go over it. So 608. Can we not make this so small? There we go, 608, and then the risk level is 595. I always account for slippage in the way I made this system here. Worst case scenario, you're out at 5.9 flat. 5.9 flat. So the idea is the same again. Downtrends, uptrends. You're playing off of this. It held. 5.9. Okay. You're in at 608. Your risk level is 595. I mean, not 590. This is like worst case scenario. Again, you're in at 608 right here. This candle in theory, and your risk level is if it breaks the bottom it just made at 595. So why did in this case require 5,000 shares, which is half of 10,000 shares? Because it is more than 2 sections. Again, this section amount, this amount of a penny or whatever it's called. So in theory, let's just go ahead and put, keep it at 10,000 shares. 608. Okay, so at this point, let's go ahead and count how many sections is the entry from the risk level. 608 to 595. Let me just double check. And yeah, I got it right. 608 to 605, that's 1 section. 605 to 6 is 2 sections. And then 6 flat to 595, that's 3 sections. Because we went from 1 to 2 sections, which is the 10,000 shares default, to now 3 to 4 sections, we divide the amount of shares in half. So for example, in this case it was 3 sections. We're going to divide it in half, so that means we're going to trade a 5,000 share position. So now let's just see, a $304 position, 608. Worst case scenario, it breaks your risk level 595, which was 3 sections away from your entry. You're out at 590, so 304 and then 590, 295. So 295 to 304 is $9. Very close to that $10 risk level, and very quick math just to see what is the difference from the potential entry to the exit, in terms of what the risk is if you have to exit and it fails, and maybe account for slippage too, which I always do. Here's an example again where, you know, it's 3 sections because it's more than 1 to 2 sections, which is the original 10,000 shares. It's in 3 to 4, it turns into 5,000 shares. And of course, if it's 5 to 6, then that's going to be 2,500 shares. And that's how the system works here. Again, the default position shares from 1 to 9 cent stocks, which is what I tend to trade the most, is 10,000 shares. And then according to how many sections by 2s, you know, you divide that amount in half. So let's look at right here. This is 10 to 99 cents. The default amount is 1,000 shares. So let's go ahead and do this an example right here. 11.6 and 11 is the risk. And the worst case scenario is 10.5. Again, you're looking at this setup here. It's you know, 10 cent and up stock, so immediately 1,000 shares. And then, you know, the ideal entry point, or at least the one in mind, is 11.6. Okay, and you're risking 11 because that's where it bottomed. It bottomed at 11. It looks like it's trying to make a move towards the upside, and maybe it will continue and head towards VWAP, which is a goal that I have a lot with morning panic bounce plays. But worst case scenario, it breaks 11 and you're out at 10.5. Okay, so for this example, 11.6 to 11.5 is super close. So I would just not count that as a section, but I would count 11.6 to 11 as one section. And because this one in particular is from 1 to 2 sections, we stick at the size, which is 1,000 shares for stocks over 10 cents. And maybe in this case, you know, it breaks 11, you're in at 11.6 and you're out at 10.5. So let's see, 11.6 is right here, $116 position, you're out at 10.5. Right there, that's about 11 bucks. So again, that follows a $10 risk level, and here was an example of a 10 to a 99 cent stock that was only 1 to 2 sections. Let's make another example. I just want to really kind of reinforce this and show that it doesn't matter really what price is the stock, as long as you're trading by a certain default shares, whatever it means. You know, in that particular trade right there, you're going to still be trading a $10 risk level. And of course, if you want to trade a $20 risk level, well, instead of 10,000 shares or 1,000 shares or 100,000 shares, you're going to trade 20,000 shares, 2,000 shares, 200,000 shares, or in this case here, 200 shares. And if you want to do a $5 risk level, 10,000 shares, 5, you know, you can make like a little spreadsheet and maybe print it out so you can have something to look at. But that's how you scale up, and I think that is so much better than what I was doing previously, which was just like an $8 risk level on OTC setups and then a $15 risk level on morning panic bounce plays, which kind of was a bit weird. This is a lot easier to just play off of simple, you know, 10, 20, 30, 40, just very simple numbers instead of trying to do something like $8 or $24, which, you know, requires a lot more time wasted and math trying to figure out what the size should be to trade accordingly. So let's go over another example, 373 and a 37 risk. 37 right here, and the worst case scenario is 365. I try to make these prices like realistic, not something random. And I did see other videos on how people trade dollar risk levels and stuff. I think it's just dumb if you just, oh, I'm gonna cut right when it gets 4%. Like, what? No, like actually trade off of a level in the chart. At least that's what I think as a day trader. But just trading a random percent level just sounded so stupid. But let's see how many sections 373 is from 37, and as you can guess, you know, it's just one section, and because it's over 10-cent stock, 1,000 shares, so 373. How many sections? 373 to 37 is one section. So because it's 1 or 2 sections, 1,000 shares, you don't have to divide it by half because it's 1 or 2 sections. Worst case scenario, 373, you're out at 365. 373. Again, that's, you know, $8. So that's pretty close again to a $10 risk level, not an $8 risk level, a $10 risk level. Let's go over an example where we have to divide the shares in half, which in this case 5 to 6 sections. Wait, actually no, that's sub penny level. I guess I don't have an example here that I wrote on this one for this price level, but let's just make one up, okay? So let's just say we're at 49 cents and a half, and then let's just say our risk level, it held 47. Worst case scenario, 46.5. Let's count how many sections. So first, let's go ahead and put 1,000 shares because that's what we're trading right now. 49.5. How many sections is your entry price from your risk level? 495 to 49 is 1. Okay, 49 to 48.5 is 2. 48.5 to 48 is 3. Okay, and then, you know, 48 flat to 47.5 is 4, and then 47.5 to 47 is 5. So that's 5 sections, okay? So it's not 1 to 2 sections, which will be the original size. It's not, you know, 3 to 4, which would be, you know, 500 shares. But actually, in this case, it's, you know, 5 to 6. So it's 20, not 20, but 250 shares because you had to divide it twice in this case. So again, we're in at 495, $123 position. Breaks 47. Worst case, you're out at 465. 123 becomes 116. So again, that's about $7, $8, pretty close to $10. And that's how you trade accordingly in this case, where it was not, you know, so close to your entry price to the dollar, to the level that you're risking off of, which is possible, especially on some lower priced, not lower priced, but low flow OTCs that trade with a spread. That's exactly what you have to do in a case like this. And I hope the system is starting to make more sense. Let's go over sketchy sub penny levels. These are very hard to trade because like for example, a sub penny stock at 17, you don't see it really go from 17 to, you know, like 17 and a half. You normally just see it 17 and, you know, at the bid, and then the ask is 18. But let's go ahead and do a sub penny stock example, just one, because they're kind of nasty. Let's do, in this case, let's do this example right here. 17, and then the risk is 16. You're risking 16. Actually, we'll do one more example because they do trade with a bit of a spread. We'll do 2 examples. We'll do one that's like one where you have to divide the position. Let's just say that's the case. Sometimes that is possible that you know, you throw an order at the ask, where you kind of get something in the middle anyway. But you know, sub pennies are kind of sketchy. But let's just go over an example. We start at 100,000 shares, and let's go to sub penny level. 17 is the entry. It held 16. If it breaks 16, you get out. Maybe you didn't get out at 16 or close to 16, 15.5 for example. How many sections is 17 to 16? 17 to 16 and a half is 1. 16 and a half to 16 is 2. Again, just one number, 17 to 16, that's 2 sections. So we're at the original position size of 100,000 shares because we didn't go more than 2 sections. We're at 15.5, which would suck, but of course I can't really do 15.5 right there, but you know, in theory, you're at 15.5. That's $15. That's close to the $10 risk level, but not extremely. That's about the furthest you're going to be off from a $10 risk level with this setup, this strategy that, you know, I'm going to try using in terms of how to trade with a dollar risk level. But that's how OTCs are. They're very sketchy, and you know, the sub pennies are in particular super sketchy, and you're going to have to deal with that, you know, because they don't necessarily, at least from my experience, OTCs trade like in halves when it's at this price level. So let's go over one where you have to go and do more than one section, which is going to be very likely for sub pennies. Let's do one that's 5 to 6 section, 48 and 45 is the risk level. $45, and then you're out at $44. This is a more realistic example. Again, not all sub pennies trade the same, but this is a bit more realistic. Downtrends holds 45, you're in at 48, you're risking 45 breaking. Worst case scenario, you don't get out at 45, or maybe 44 and a half, you're out at 44. How many sections is 48 to 45? So again, we have 100,000 shares, which is defaults for sub pennies. 48, and let's count how many sections. 48 to 47 is 2 sections. 47 to 46 is another 2 sections, so we're at 4 sections. And then 46 to 45, that's another 2 sections, so we're looking at 6 sections. Because it is 6 sections, we're going to have to divide this multiple times. So it's not 1 to 2 sections, which is the original size. It's not you know, 3 to 4, which would be 50,000 shares, right? And it's not you know, 3 to 4, it is 5 to 6, which is another section. So, you know, we're going to divide that, 25,000 shares, and you're in at 48, $120 position. It breaks 45, you're at 44. 48 to 44 is a $10 risk level, and you're right at $10, right in the middle on a realistic example. And now I hope this starts to make a lot more sense. Let's do one with $1 to $9 again. This doesn't really work. I tried messing around with it. I'm pretty sure there's another way to calculate dollar, you know, risk level position sizing on stocks that is over $10. I don't necessarily see a lot of OTCs over $10 that are at least companies, maybe like the GBTC, those kind of things. I don't necessarily trade those, so, you know, in my case, that's fine, but, you know, it does still work with $1 to $9 stocks. And let's go over the same idea again. 323, and the risk is 320, and now we're trading at 100 shares because, you know, the price is higher, obviously. So let's go to 323 and 320. Not a lot of OTCs are this expensive, but they do exist. 315, which is a section, of course. I need to just remember that, but again, because this is now a $3 stock, in this example, $1 to $9, 100 shares, $323 position. How many sections is 323 to 320? That's just one section, so we're going to stick with 100 shares, okay? And, you know, worst case scenario, it doesn't work out. 323 to 315, 323, 315, $8. Again, close to the $10 risk level. And you'll notice that if it's one section off, you're gonna be under $10 most of the time, in terms of how close you are to your $10 risk level. And if it's like the third section, not the third, but the second or the fourth, if it's an even number, you're going to typically be above $10, but you know, you're going to trade close to that $10 risk level, at least in this case. Again, we're trading at this amount of size following that dollar risk level. So that's the case there. Let's just go over one where we have to do more. Let's do one where it's 5 to 6 sections. Let's do this one, for example, to call it off as the last one. 527 and the risk is $5. Again, I try to like put realistic examples, you know, not just putting like, well, yeah, I'm in at 527 and I'm risking 523. Like, what? You know, I'm trying to put realistic numbers. And worst case, again, 495. So how many sections is 527 to 5? So in this example, I'll probably do 527 to 520 because it's that close to 5. Or you might do 527 to 525 as one section, but I don't really want to count it just because it's that close to it. Maybe if it was more than 2 cents, maybe if it was at least 3, I'd count it. But in this case, 527 to 520, that's one section. 520 to 515, 2 sections. And then, you know, 515 to 510 is 3 sections. 510 to 505 is 4 sections, and 505 to 5 is 5 sections. Okay, so we're going to figure out, you know, how to play off of that. It's not 1 to 2, so it's not you know, 3 to 4, which would be half, but it's actually going to be one more on top of that because it was 5 times. It's going to be 25 shares. You're in at 527, $131 position. Worst case scenario, it breaks 5. You're at 4. You're out at 495, 131, 123. Again, pretty close to that $10 risk level. And there you go. That's just one more example. That's really all I have. I think this is going to help me with trading OTCs because I'll have a default size that I can trade off of, and then just calculate how many sections. Of course, you know, one to another number is going to be 2 sections. Like for example, 48 right here to 47, that's 2 sections because 48, 48 and a half, 48 and a half to 40. I mean, not 48 to 47 and a half is 1 section, and then 47 and a half to 47 is 2 sections. So I'm going to try this. If any of you are subscribed, you're going to see how I'm going to do over time. If you're not subscribed, you can go ahead and subscribe or just watch, you know, my other videos and see how I go from there. I'm pretty sure this is going to be a system that I'm going to stick to, and I'll probably make a copy of this and maybe provide a link or include it in the description so you guys can look at it too and have a copy of it as well. That's all I have, and now I have to make the weekly recap. I hope this can help me a lot, you know, because I'm going to be quicker getting in positions. I'm going to be watching the trade more instead of just trying to figure out a dollar risk level while it's moving and not miss anything. I think this is going to help me a lot. And again, this thing does not really apply when it's more than $9. It seems to be a bit different. If it's like 5 or 10 sections away, it's like you don't divide it by halves anymore. Maybe like every 2, you know, times that you would normally do it, you have to do it twice. I'm not trying to be confusing, but again, this applies to sub penny level, penny stocks, to anything to the dollar range, just not over $10. That's all I have. I hope this can help any of you guys out. I hope it can help me out. I think this is going to be something that's going to be really good, and yeah, that's all I have for this.